You'd like to find your seats. A warm welcome to everyone here today. To those who are online. How many online?
3 right now.
So today we just have one presentation, which is really split into 2 parts. And we're also featuring something new. Every forum, we're planning to have put a member under the spotlight so that we can discover a little bit more about who are the members within MLA. So Vida's taking first place today. So what we have today, the main event, if you like, is we'll be learning a little bit about the agroecology initiative, which is being done by CIMMYT, before moving on to access to finance for the rural unbanked. And Rodney Mushonga-Chawari and myself will be presenting on that. That was some work that we did for CIMMYT. So that's the program. Maybe before we start, can we just find out who's in the room? Maybe starting with you, Vida.
Some of you maybe already heard about us. So I'm the first one. We are the last baby on the block to join MLA, I think. And I think that's like one of the best membership organizations so far for me. I really enjoy to be part of MLA.
Up until I lost your presentation.
Yes, until this. So Humason Complex, we are calling ourselves home of healthy soil and healthy crop. So for us, it's everything about health, also human health, but health of the soil and health of the crop. I started the company we started 2021, just after COVID, after identifying a gap in Zimbabwe that is not enough of quality biological products in the market, and that the Zimbabwean soils are, I call it dead. The biology of the soil is it's been really affected, and we are supplying biostimulants, microbiological fertilizers, and foliar fertilizers. When we started, or even up to now, we are still working in terms of research with the BRSF, University of Chinoy, Marondera University, Kutsaga. Recently, we got certificate from Kutsaga. We did 3 years trials using our products, and we got the certificate also to use 2 of our products in the tobacco production. In terms of our products and packaging, they are suitable for any crop because it's mostly about the soil. And in terms of packaging, we also tried to cover or to cater for every farmer, starting from the backyard farmer or small-scale farmer with the sachets, going up to communal or commercial farmers. And the way we are operating or distributing, we're having an office here in Harare, but we're also distributing to the agro dealers countrywide. Today, since the member organizations are mostly focusing on the small-scale farmers, I'm going to talk about only 2 products, the Carboamine and the Grow Plus. So we are having in our portfolio now over 25 mostly biological products. So yes, what's so special or what's so unique about our products, like the Carboamine and the Grow Plus, they're 100% organic. They are also eco-certified. And in as small as the packet is, there is more than 40 ingredients. There are micronutrients, macronutrients, lots of amino acids, fulvic and humic acids, some vitamins, which makes the products, comparing with other products which are on the market, it's like a one-stop shop. Instead of buying 6, 7 products, the farmer can benefit from one product. No, still go back to the previous one. Yes, and basically, what the products are doing, they are feeding the biology in the soil, restoring the soil fertility. Whilst most of the members here, I know working with the farmers, you are promoting to compost, you manures, you mulching, which is very good, but sometimes is not sufficient, or rather it takes very long to restore the soil using this methodology. So that's why they're saying by introducing like the humus and complex products, you can speed up the process, you can improve the soil a bit faster, and you can provide other ingredients or other nutrients which you compost or manure is not providing. In terms of cost, for example, it's not only about like it's more affordable than your conventional fertilizers, but not only that, also logistics. For 1 hectare, the farmer can put the products in the handbag. There's no need to hire a car or a donkey scotch cart or whatever. You can carry in your backpack. And also, healthy crop means less diseases and less pests. Next. The other uniquenesses, or which unfortunately we are importing the products, is the base material of the product, which is sapropel. Sapropel are sediments of the freshwater lakes, which unfortunately you can't get it in the region, because as you can see, these are the composition, the composed aquatic remains or algae, which been there for more than 10,000 years. So, and the Zimbabwean dams and lakes, they're too fresh for that. Next. Here is the composition. Like I said, it has more than 40 nutrients. It has the organic NPK, CIMMYT carbon, organic acids, vitamins, amino acids, trace elements. Next. So they're addressing macro level problem, like they're restoring the organic matter in the soil, but also feeding the biology in the soil. In Zimbabwe, we like always talking about the soil chemistry and the soil structure. No one is talking about the soil biology. So we're trying to address that issue. Next. You can go on. I only have 10 minutes. So the products can be also applied as a foliar fertilizer on the crop, which is like right now, looking at the weather and looking at the crops which are wilting, the product, like the growers, can be still applied even without the rain. Is not going to burn your crop, and it helps the farmers to pass the stressful times whilst we're waiting for the rain. So it can be also applied as a foliar. Next. I don't know how many of you know the health pyramid. So like I said, healthier crop, less pest and diseases. So the products definitely increase the sugar bricks level, which reduce the pest and diseases. Next. Like I said, diversity is the key. Mostly what we're recommending to our farmers is your NPK fertilizers, your compost, your manures, but for the crop to really, or for the farmer to have a good yield, the crop needs a balanced diet or proper diet, and we believe that these products can provide that. And like always, you are asking for proof is in the pudding, so I just put some pictures to see. Like for example, this one on the right side. On the left, the crop is with the humus on products, and on the right is without. You can see the difference. In the middle, we are observing that by integrating the products, the maize is giving more cloves. There's another B11 for for sweet potato, 3.2 kgs. So what we are observing that like they are biostimulants, so they're really pushing the yield, especially in the horticulture. So the farmers are getting bigger size crops. Like you can see here in the middle, 20-liter bucket, for example, and with the watermelon, and also the sweetness because of the sugar grapes. There you can see also some sorghum. And before we go back to the tobacco, here we had a farmer who actually the tobacco company already wrote off the crop. They said nothing is going to happen. And then he got the Humusson products and he managed to harvest, he managed to sell, he managed to make money. Yeah, thank you. Why I was pestering Michael to give the presentation is not only to talk about the products, but just also to share what it means for us, like a small company. We are not to compare with you Superfed or other big fertilizer companies. When I started this, my idea was that I'm going to target the small scale farmers. That's why also I brought like, so we started with the 1 hectare packaging, but then we went even smaller to the sachets. And then what happened that now most of my customers are commercial farmers. It's just like naturally we shifted to the commercial farmers because it's easier to reach them. They are reading the ingredients and they're like, okay, let me try on 20 hectares, let me try on 100 hectares just by reading the ingredients. Now, when it comes to the small scale farmers, we don't have the resources to drive to Binga or Chipinge or wherever and convince every single farmer that like this could benefit the farmer, the crop, the soil. So that's why I've been knocking at many of your doors. Many already, I think, know me, that like, how can we partner? How can we cooperate that also those products can reach the small scale farmers? That it doesn't end as usual with the commercial farmers.
So the guy's going to take the first Senos slides. Self-introduction.
Hey, afternoon, everyone. The first time when I stood in front of partners of MLA, I was still very young and not as confident. Hopefully, I've grown. It was 2 years ago. I'm here to talk to you about our initiative, SMET, which is also part of the CGIAR. Please do not ask me to define that. I am not very good with acronyms, so I'm not going to get into that. So we all know about Zimbabwe, about the fragility that the system, food systems have in terms of the biophysical, in terms of the socioeconomics. I will not dive into this. But as people within the food system space, we have our own mandate to make sure that we ensure food security for all. And in spite of climate change, in spite of economic shocks and instability. So when we go out into the farms, we expect to see a farmer participating in perhaps the sorghum value chain. We expect them to have manure. We expect them to have traction to help with plowing. We expect them to have everything in place so that they produce. But this is never the case. We have all these factors that are pulling left, right, and center, some social, some economic, even cultural factors. So how do we help people to transition to a space where they can provide for themselves and also for a very ambitious government that wants to then see us transitioning out of whatever economic standards we have to an upper middle class economy. regardless of how or who you see inside. These factors are more or less the same. It's almost like a dice, right? Where I want a 1, but behind the 1, there's a 5, there's a 4, there's a 2. Same factors, but different context. So, the agroecology initiative looks at that, looks at who is in what place, in what situation, in what context affects them partaking in the food system. Within Zimbabwe, I think I've actually been in different forums with some of you guys and presented. We're trying to see if we can integrate things like your ecology, social, economic dimensions for sustainable agriculture. When we talk about sustainable agriculture, we're not saying that we want all our farmers to become commercial farmers. We just want farmers to be able to produce for themselves and their family, and perhaps partake in markets in the broader context. It's obviously multidisciplinary. Therefore, we partner with APT, we partner with Hurima, because we can't do everything ourselves. I think a lot of you know that CIMMYT is well known for maize and wheat breeding. But beyond maize and wheat breeding, we've got farmers that are within our system, and the system is the food system. We can only do so much in trying to understand these contexts, and therefore we value the partners that work with us. But over and above, a lot of the things that we need to do, or that we are trying to do, needs to be scalable. Very fine, a farmer is affected by whatever is around them, and therefore creates a different context for that particular farmer. But then we have a million other farmers that we need to deal with. Therefore, we need to then create innovations that can help several farmers within certain contexts. So what are we trying to do? We're using agroecology as an approach. Others use it as a science. Others use it as a movement. But for us guys, we're trying to use it as an approach which is holistic, that can minimize adverse environmental impacts, improve farmer-consumer connectivity, create knowledge, new or maybe not new, and inclusive relationships. In other words, we are trying to create an enabling environment for both the farmer and also the consumer. And in terms of the approach, we are trying to embed this in a socio-political dimension, trying to understand the enablers that can allow for processes to happen. Therefore, the conceptual framework that we're trying to do is embedded in agility. So we're not just going to stick to a certain framework, but we're going to be agile and responsive to whatever forces throw our way. Next slide, please. So the Agroecology Initiative is obviously founded in the 13 HLTE principles of agroecology. They are 13, not using the FAO. Someone from FAO is here. Not the FAO 10 elements, but the 13 principles. When we talk about participation, fairness, we talk about diversity, we talk about synergies within the system, and we talk about biodiversity input reduction. Note, I talk about input reduction, not total substitution. And a lot of it is about centering food producers within a settled network. It cuts across 8 different countries: Peru, Zimbabwe, Kenya, Burkina Faso, Senegal, Tunisia, Laos, India. And using different entry points, we're trying to see how we can improve farmer participation in local food systems. We are using 5 work packages. Sorry, what is the names, but I can always share some of the reports that we've made. 5 work packages. The first work package is on knowledge co-creation. The second work package is on developing matrices and indicators to measure impact. The third work package, and this is the reason why we are all here, is trying to have farmers participate in businesses. So it's around value chain development, business models, and finance mechanisms. The fourth mechanism is about policy, governance. Do we have an enabling environment that allows for agroecology transitions to actually occur from grassroots all the way to a national scale? And the last work package is this work package 5, talks about behavior change. Whilst we can get into these communities and give them all these innovations, if we cannot foster behavior change in what they currently do to then what we want them or hope they'll want to do, what's the point in it? I think it becomes one of those projects that comes in and out. So what actually can influence behavior change, and how can we actually shape it in a way that they themselves become agile and responsive to innovation, creation, and to knowledge generation? So we started off in 2021, and a lot of it has been trying to understand the context. We can't be everywhere. We can't help everyone. So we're operating in Mulewa and Mbiri. And both of these areas are very different in terms of their belief systems, their social networks, and the resource base that can actually propel them into adopting things like agroecology. But still, they might be different, but they have more or less the same factors affecting their participation into transformative agriculture. And one of the things that we noted was that issues of markets, issues of businesses, and issues of finance is always top of the list. With this, I conclude my introductory remarks, and I welcome Michael to take on the next few slides.
Thanks so much. Okay, so why this work package 3 about markets and finance in this context of agroecology? I got a great paper written by FAO, and it was on work done in Lesotho, and they discovered that more advanced agroecological farms are strictly linked to the existence of local and territorial markets. So the more advanced you become in agroecology, the more likely you're going to be interacting with these markets. They're short circuits and short circuits of commercialization. The opposite is also true. Sustainable marketing practices tend to support the overall agroecological transition of farms. Next slide. Furthermore, they noted that the more advanced farms have high net revenues. Higher revenues are strictly linked to more sustainable marketing practices and to the overall destination of agricultural production. In particular, more advanced agroecological farms are more market-oriented than other categories that tend to produce mostly for self-consumption and have lower revenues generated through agriculture. So that's the link between what Mbaye has been talking about and what I'm going to be talking about today. Next slide. So we've been working with CIMMYT for 3 years, and these are the sort of activities that we've been doing. We started off with value chain maps in those districts, analysis, selection, and then we looked at functionality and inclusivity of those value chains. We identified lead firms for the various value chains, and then developed business model canvases. In 2023, we did cost benefits analyses and other financial metrics, analysis to determine contribution to agroecological transition, business model ranking, so which businesses were more advanced and which businesses looked the best fit for those districts. Business model design, project information plan, and then contracting of those businesses. And then this year, we reviewed the performance of the models and we undertook the study on financial services for the rural unbanked. Next slide, please. That's just to show you the two districts that I'm sure you're all very familiar with. Two very different areas. So Mberi, Natural Region 4, pretty hard territory. And Morewa, a softer sort of territory, intensive farming, Natural Region 2A and B, also much closer to Harare. Next slide. So we went through a number of different companies and we ended up with one company in each of those districts. So in Mberi, we identified A-Growth, which is part of PHI, one of the members of MLA. The crop is red sorghum, and in 23-24, they did a 50-hectare pilot. Potentially, they want to do 1,000 hectares because of a huge demand of 7,000 metric tons per annum. Fertilizer and herbicide were provided to improve productivity, but the size of the scheme was reduced dramatically. So just that 50 hectares in the first year, 50 farmers, 1 hectare each. There was an intentional approach to reduce the amount of fertilizer because one of those principles that Dumbai was talking about was less reliant on external inputs and trying to make your own inputs in situ. They provide a field officer who provides training extension, operational support, and work with agri-techs. So that's the Mberi story. There in Morewa, we focused on the Sasso chicken. So this is a Sasso, for those that don't know, it's a hybrid chicken. It's got good food conversion ratios, dual purpose, eggs and meats. Importantly, it can scavenge. So the problem with a broiler, a smallholder doing broilers, at the end of the cycle, if there isn't a market in place, that broiler needs to keep on eating. With these chickens, you can just put them out and they'll scavenge and they'll fare much better than the broilers. Amara have also developed a mobile application to coordinate production. It allows for farmers to access group discounts and also manage them to coordinate the market. So if there's a market in place, there can be continuity of supply to that market. The model that's been developed is to initially deliver the day olds to specialized groups within the community that then raise them to the teen stage at about 4 weeks. So that's a small business that a group can get involved, or a group or individual can get involved in, and then they sell on into the community. The mature birds are being sold within the local community. There's a demand building up in Morewa, and they can be fed or raised free range. So the methodology of our study was pretty standard. We started off in the district, speaking to farmers, focus group discussions with both program participants and ISAL groups. And then we did key informant interviews with district stakeholders. And then finally, visits to local financial institutions. In Harare, you can see the key informants that we interviewed during the course of this study on the right-hand side. We started off with, I think, SMEs, so the Association of Microfinance Institutes. We went to SMEs, that's the Small and Medium Enterprise Association of Zimbabwe, before proceeding to banks and MFIs. So we all understand the context, I think. 23-24 extreme drought conditions, the worst in 4 decades, and a 21.2% contraction in agriculture. So that's resulted in a decline in economic activity, since agriculture is key for Zimbabwe. Lending institutions reducing their risk exposure by focusing on irrigated agriculture. Unfortunately, at this time, that's not looking very good. Finance needs for agriculture are forecast to increase before the 24-25 season, as many farmers do not have savings to finance their coming crops. So, if we look at smallholders, what are their challenges? And one of the primary ones is information asymmetry. Financial institutions don't know those people out there. They don't know what risk they pose. And so without knowledge, the risk profile increases. Fluctuating and unpredictable household incomes due to climate change, erratic weather patterns, and on-farm production challenges, pests, diseases, price volatility, poor access to insurance, inability to meet with minimum equity contributions required by financial institutions. They don't have lateral that's in a suitable form or value. So that makes it difficult. And there's high administrative costs associated with small dispersed farms. So if we take all of that, it seems quite a dilemma. How can these farmers possibly access finance? Rodney found this great graph, which sort of shows what we're talking about. So on the left-hand side, we have the risk. And so the higher you go up, the higher the risk. On the right there, you have the likelihood of cost recovery. Will that organization get its money back? And so on the right, this is where you see a lot of private sector activity taking place. They want those people, those farmers, those big commercial farmers who are going to pay back. Their risk profile is low, and it's looking good. On the extreme right, these are people with very little. They're not at all attractive to the private sector. And then in the middle, we have a sort of market failure. These are the in-betweeners. And these are the people that are not able to access or with difficulty access loans. They down there at the bottom, you can see they can get money from infrastructure projects, smallholder farmers. Oh, that's who they are. Carry on, please. So just about the MFI sector in Zimbabwe, obviously these small and mobile organizations, they have much better geographic reach than the bigger financial institutions, but they prefer salary-based loans because that's security. So outside of that, you don't see as much activity. The bigger MFIs, they've been embracing technology to close the information asymmetry gap, including FPCs, Microplan, Financial Services, CBZ's Red Sphere Finance, and First Mutual MFI. In the table there, you can see the number of organizations and the growth of that. So, please. Are you taking over now?
Yeah.
Thank you. He's taking over.
All right, thanks, Mike. Thanks, like I introduced myself, my name is Rodney Shongachwari. Maybe Tony, you can go back to the slide. I want to highlight, this one. I want to highlight the market failure. So you see, this is where the SMEs are, this is where the farmers are. These are the people driving the economy. 60% of the economy is driven by the SMEs, but we don't have funding. For the banks, it's easier where they have high cost recovery to loan to a bank. So they sprout out of financing, going to the commercial guys who are really developed with bankable business models. On this other side, the government is prioritizing the social welfare cases. People who do not have food, this is where they are. Then we have these people who are the large chunk who are driving the economy, lacking access to finance, where we find our smallholder farmers and SMEs. I thought I highlight the importance of this market failure and the role the development sector and DFIs can play to close that market failure and drive the economy. Thanks, Tony. We can go to demand for finance in the project words. So demand is the willingness and ability for people to acquire a commodity. So in the case of finance, demand services is offered by different players. We include the formal banks, MFIs, quasi-formal, such as the NGOs, and the informal friends and relatives. What we found out was Mbire it's marginalized. There's poor infrastructure development from roads, telecoms infrastructure, and there's limited economic activity given the proximity to the key towns. So there's very low demand for credits. There are no financial institutions. If ever you find a microfinance in Mbire, they were lending to civil servants, the teachers, and the government employees. Those are the target. Then for Murewa, there is greater economic activity. Given the proximity to Harare, farmers have access to water. They can do garden, they can do chickens, which they push into Mbare. So the demand was a bit higher compared to Mbire. But in as much as there was demand, as I interacted with the farmers in Murewa, yes, they wanted finance, but I think they lacked understanding of finance to understand what's the interest rate, what does it entail to get a loan. I think there's a gap for us as the development sector to educate farmers on what to watch out for when accessing finance. Then moving to the sources of financing that we found in these two wards, which I think I can extrapolate to majority of the districts that we work in. The most important form of finance for the farmers that we are working with, it's the informal one. So the bootstrapping, the self-savings, they generate from selling their crops and livestock. That was one of the key financing mechanisms that they have access to. Remittances, they are very low, given especially in a drought year with high unemployment, and it comes in form of in-kind. The children buy groceries, they buy fertilizers. So it's not going into productive, it's more consumptive remittances that we are seeing going into these two districts. Then the ISOs, they are playing a key role in terms of bridging the gap for those who want to scale up, do business. But interestingly, in as much as there were ISOs in both Mbire and Murewa, the ISOs in Mbire, they were more consumptive. They were saving, they buy groceries, they have share outs of groceries. They are not going into productive uses. Whereas in Murewa, the loans from the ISOs were productive. Farmers would borrow from the ISO, buy seeds for the garden, buy seeds to buy chickens, or to invest in another small business that they are doing. So this is just to back up what we found out. I think it aligns with the CIMMYT 2024 survey findings with the ISOs as the key contributor, sitting at about 1.5%, friends and family 2.5%. Those are the key sources of finance for farmers in these rural districts. Then that shows the sort of timeline trends per province of ISO participation in the different provinces. Then coming to the formal mechanisms, the presidential input scheme is playing a key role in terms of funding inputs for agriculture. It's a key source of finance. Especially in Mbire, there are no agro dealers. We expect farmers in Mbire to be farmers, but there's no agro dealer, not even a single one. I think the closest they have interactions with the agro dealer is when CIMMYT does the seed phase and they invite the private sector to come. So yeah, the situation is quite bad in Mbire, but Murewa, we have a bit of agro dealers going up and down, but the presidential input, given the nature that it's free, it's accessible to everyone. Then contract farming is another key source of financing for Mbire farmers. Egg growth, we introduced egg growth doing our red sorghum contract farming for buffalo breweries. And I think Delta is in Sarabani, but there are some farmers that they are contracting in Mbire. So contract farming is playing a key role there. And the previous history of contract farming for sesame and sorghum. So contract farming is one of the key sources, formal sources of finance that can be used to help farmers access financing. Then group-based financing. So Michael talked about the Amara mobile app, which they are using for digital extension to track the beds which are mature. I think there are more opportunities using this application to access it in markets. But what they've done in Zambia, but it hasn't been explored in Zimbabwe, is to link the high-performing groups to sort of impact investors that are in the developed country who want to invest in a small group, maybe they can invest $200, they get 10 to 15% interest, which is higher than what they get in the developed country. So in Zambia, they use it to unlock funding for the smallholder farmers that are doing poultry. Then SACCO finance, I think the SME Association of Zimbabwe, they have a SACCO, and there is an opportunity for us to develop the ISOs that we are working with into SACCOs. But the small SMEs, they have never gone out to lend to rural groups, but they were open to the idea of going out to also lend to support farmers in the rural areas. Then we have been complaining in Zimbabwe about migration. We had an opportunity to interact with people who had lived in the diaspora, we had worked with rural groups. I think this again speaks to more impact investment, where this is an opportunity that we haven't explored, but the lady we met with has done it. She would organize diasporians who come from different villages. They pull out funds. She lends to the groups. They give a better interest rate. She forwards pays to the investor at 10%. They get a better interest rate than what they get in the developed country. We help the farmers get access to finance. This has potential to be developed further, but I'm not sure in terms of regulation. The moment you start to lend to someone, currently it was more informal, but the moment you start to lend to someone, then regulation comes in. I think we have seen the taxation requirements that are coming in the past days. So potentially there's potential to collaborate with the diaspora to invest back, and the farmers and the SMEs from the rural areas can pay back. Moving on, we had interactions with the bank, specifically AFC, Empower Bank, Stewart Bank. I think this is across Africa as a whole, maybe with the exception of even South Africa, which is their most developed banking infrastructure. The banks, they don't have infrastructure in the rural areas. They are concentrated in the urban areas, which makes it very difficult to service the rural communities. We have seen urgent banking in the past years, but they've sort of disappeared. In Mbeere, we didn't even find an urgent bank. I think the closest we found was an EcoCash urgent, which is not a bank again. So there were banking barriers related to information asymmetry. They are justified. How do I lend to someone whom I don't know? Whom I don't know their spending habits, their income sources, their banking history. I haven't banked with them. So the banks, they are quite risk averse. They have tighter KYC documentation coming also from the regulation. I think the Basel II, which came after 2008 financial crisis, made it very difficult for the banks to operate and lend. Collateral requirements, high interest charges, I think bank charges as well. So barriers unique to smallholder farmers, geographical location, limited banking networks. For those banks that were working with the smallholder, for those we interacted with, they only do it when they have concessionary funding coming from a development institution, or they have a credit guarantee that when smallholder farmers fail to pay, they can recoup the cost of investment. It takes 48 to 72 hours to apply for a loan. But now you can imagine a farmer from Mbeere traveling all the way 300 plus kilometers to come to apply a loan. Then they are told your collateral is not enough, you go back, and the fine print again associated with the banks. It makes, I think it's too not accessible to our farmers. But this is what we found from interacting with the banks. Then interestingly, I think it's important to note the government efforts through the RBZ to lessen the collateral requirements to help SMEs and smallholder farmers to access finance. Most banks, they accept immovable property as collateral, which hinders funding for SME smallholder. The banks that do accept movable collateral, they are willing to do so, but only when they put a haircut, 80% haircut to the value of the equipment. So you can imagine you have an equipment which costs $10,000, 80% is removed. You're only 20%, 2,000 is taken as collateral. It's as good as you don't have collateral. So RPZ, they manage the collateral register, which has the movable and movable assets. I think there's been adoption from the presentation that was made that was last year, right? 2022. There's been greater adoption, but mainly in the microfinance segment. Those are the ones that it sort of adopted the movable collateral. So the credit registry basically enhances sharing of information and promotes responsible lending and to assess creditworthiness of the borrowers who are not normally banked and you can't access information about them. Then interestingly, we met with a company which presented, I think, last month at a fora, eLivestock Global. They have a solution, a blockchain linked solution, which allows traceability of livestock. So by linking it to the blockchain, we can now collateralize the livestock because we now understand that Dorcas owns this animal. There's traceability in terms of ownership of that livestock. So they are pushing that technology. Early days, yes, but I think for those who attended the last fora, there are some opportunities around that to improve collateral for smallholder farmers. Okay, so we had some recommendations that we discussed with the banks, asking them what would it take you to lend to the farmers? How would things look like for you to go into Mbire, to go into Murewa? One of the recommendations was off-take financing, where an off-taker originally, majority of the companies, it's not their business to lend to farmers. They don't know anything about assessing credit risk, about assessing the risk of farmers. So some of the banks propose that if an off-taker is financing, they want to fund inputs, the bank, the off-taker can deposit the money with the bank. It earns interest, number one. Then they manage that funding for them, lending to the farmers. That was one of the proposals discussed. Then the off-taker would share the farmer database and information with the financier, reducing the information asymmetry challenge, which makes the risk profile of the smallholder go higher. Then second was concessional funding, partnerships with development partners to invest in concessional fund, which the bank can negotiate discounted rates. I didn't talk about the interest rates. The going interest rates in the commercial banks, I think we found out that was 15 to 20%, which is quite high for agriculture and especially for rain-fed agriculture. So if a development partner wants to go into a certain area, we can ring-fence farmers around that area. Then we provide an agreed interest rate, or the donor could cover the cost of the bank to operate in that ward or village or district, until such a point that the financial institution starts to make a profit and they can take over the funds. Then credit guarantee schemes. This basically are where an investor or a partner guarantees that if the smallholder farmers fails to repay the loan, we will guarantee the loan. Going to microfinance lending, based on the foundations of microfinance started by Professor Muhammad Yunus in Bangladesh with the Grameen Bank, what he wanted to prove was that MFIs can be the bank of the poor. I think he started, he lent $27 to a group, which was in Bangladesh. They managed to repay without collateral, without all these agreements. And that's when he started the Grameen Bank. And it had less requirement compared to the traditional banks. So typically, the MFIs we interacted with, the more flexible lending terms, and they are closer to the farmers and the SMEs. But what we found out is there is slowly emission drift amongst the MFIs. They should be targeting the poor, but the preference is to lend to the to the civil servants. I think this information we got from the SMEs Association that 80% of the loans from MFIs they are going to civil servants. So this has been emission drift. If we are looking at the founding principles that Prof. Muhammad Yunus had when he found the Grameen Bank, but the MFIs are also justified. The information asymmetry challenge, where in as much as they are closer to the farmers, do they know the farmers? Do they understand the business that they do? The repayment modalities as well. So I think we need to reconcile that. I'll talk when I get to technology, how we see the opportunity around technology to ease the information asymmetry gap. The market interest rates are 8 to 10% per month. This was the average. I know Old Mutual would argue they are offering 5% in town, but I think when you go out to Mbire, you would increase the premium. But equally at 5% a month, no one can do any production at 5% a month. So again, if we go to the market failure, that diagram we discussed, there's still a market failure. It's prohibitive to borrow at 5 to 10%. So this is where us as development partners can come in to lower the interest rate to grow the guys to a certain scale of production, which makes sense for a business. The MFIs are also accepting asset-based financing. I think Kurima has a partnership with FBC Microplan. I don't know how that is working, but majority of the SMEs are also accepting asset-based financing, where if a smallholder farmers want to invest in equipment, they collateralize that equipment. I think because of the proximity to the farmers, understanding the culture, close proximity to the admins, they can easily recoup the scotch card, be it the thresher. So they are accepting that. Then RBZ has been encouraging MFIs to reassess their models and cost structures to ensure that pricing does not hinder access to services. Cost can be reduced through digital finance delivery. But what we found out, only the big MFIs had adopted the digital route, the likes of Old Mutual, Microplan, Red Sea. The majority who are out in the raw areas, they don't have access to these digital technologies. I'm not sure what does it take for us to support them or for them to invest in digital technologies. Then our recommendations to MFIs, they were closer to the banks. Off-taker partnerships, where off-taker invests in the microfinance and they lend onwards. Ordinarily, banks and microfinance, these are depositors' funds. So instead of a contractor going directly risking all your money, you put it in a microfinance, you get a bit of interest, they manage it for you, you get your money back, you get your crop back. That was the value proposition coming from the microfinance, which we found useful for both the players in the participating. Then revolving funds. I think the proposal from the MFIs, the argument they made was, in as much as it is good for us development partners to give grants, we are only giving a grant to a group of farmers or one farmer. How about if we put the 10,000 that we're supposed to give to the group, then the group repays, the microfinance can continue lending and grow the impact. That was one proposal. Then we agree on the interest rates. They were open to that. Then matching funding, where a development partner could put in 50% funding. The MFI could put another 50%. But here the challenge was it lowers the interest rates. The the fund from the MFIs still require the high interest rate, so it will impact on the investment made by the development partner, but we can come to a better interest rate then. Lastly, on the sources of finance available for the farmers, I think they are digital innovation. I think this is where I see the big opportunities with the rural farmers. If we are looking at the dimensions of access, financial inclusion, which is access, quality, and usage, it's not enough to just access. You have to use the bank account. I think majority of, okay, not majority, I'm extrapolating assumptions. But we have people who have access to a bank account to get their salaries, but they don't use the full service of the bank. Can we say that they are financially included? No, I don't think they, because you need to use. So with the digital innovation for EcoCash, you don't need to go through the KYC to open an account. It's just your phone. You can transact 24/7 as compared to the traditional bank escrow, where you have to go 8 to 5 and you travel to town. So I see a big opportunity around digital innovation and nano loans, and slowly EcoCash, because smallholder farmers are transacting, they can map the spending habits and the flow of money within the account. They can model a nano loan to the smallholder farmers. I think we have seen these Kashagi loans. I think they have potential to be grown because it's closing the information asymmetry gap that we traditionally have because the farmers are not banked. CAPS, I'm excited about Omari, which is coming on board, rather old mutual. The Texta Cash, I think those are some of the available options. I think the USAID Digital Agriculture Ecosystems Assessment also mapped other players that are in the industry with digital innovations. So the digital platforms is potential to reduce the transaction cost, administrative cost, because it's application for a loan. I've applied for a Kashagi loan at a toll gate. Instant, I got the money, paid the toll gate. So if we could grow these loans, they have greater potential to help the farmers access credit and help them to be financially included. For the financial institutions we interacted with, they do accept EcoCash as a form of transaction, financial record of transaction. So I think that's one step further, but there are still limitations which we need to work on, literacy, mobile, smartphone, mobile penetration, and networks. Those are some of the things that we need to work on. Then we looked into insurance. Since majority of the farmers, they are doing crop production, drought weather index insurance that safeguards against inadequate and excess rains is the most suitable and affordable option for farmers with below 5 hectares. I think offering insurance, the multi-crop peril insurance, too expensive, farmers can't access it. But if we can, again, this is technology. It's linked to weather index, to the smart weather stations. Some are using this moisture sensors. So there is an opportunity around there, which is offered by Econet Insurance, Old Mutual, death and funeral policy insurance. I think this is the most popular insurance among Zimbabweans. I don't know why. But yeah, that's the insurance. I hope to get to a day where farmers are investing in crop insurance and less of funeral policies. Most of the companies that are offering insurance products, they prefer to offer through aggregators because of convenience and cost reasons. So they partner in off-taker, then as part of the contract farming that is rolled out by the company, then they embed the weather index insurance, for instance. Yeah, the markets, I think this was one of the things that was highlighted by all the microfinance and banks, that they only lend to someone. The prerequisite for funding is credible and profitable market access. So we need to stimulate the market leakages to help farmers get these loans. I think for the case of the districts where we are working with, A growth is significant. Is a significant rate sorghum off taker, and they have an unmet demand. I think for those who understand the market, the beer market, Delta will consume about 13,000 tons of sorghum annually, and Buffalo is coming to compete with Delta. I hope Delta is not in the room. So there is potential to grow with the A growth guys. Then the SASO, we are still working on the markets, but the formal markets, the SASO beds are not really known within the urban areas, the restaurants, but they do offer convenience of cooking softer than the Roadrunner for same taste, fast growth rate, which helps with consistency of supply. So I think the market is an important pillar where to help farmers access financing. I think I come to the end of the presentation. I'll invite Wimbai to introduce the team that has been driving the agroecology initiative.
So I call it the A team, not because we're doing agroecology, but because it's an awesome team. We're all colleagues, friends. We're all spread out. Number one, Paswell, he's from Kenya. He does more of the policy work. Moti and Hambulo, they do more of support for APT, Hamara, and the business side. Yasiem is more like our technical advisor. Dennis, he's more into the water space. Tawarai supports Moti and Hambulo. Dokas, there's been an evolution. I got this picture. I don't even wonder what I think she was still probably in her teenage days. I'm not so sure. And then there's Telma. A lot of the things that we also try and do is fast development inside and outside. So for those that don't have masters, we try and have them through masters. For those that don't have PhD and so on, because we believe that in as much as we are also helping our communities around us, we also need to capacitate ourselves so that we can respond to issues that come into play.
That's it.
These are our main partners, main implementing partners. We have BioHub Trust, and they do more of the stakeholder engagement and some of the advocacy that we do. Because, like I said, as CIMMYT, we do lack in some of these other skills. With APT that have been supporting us with their wonderful work on trying to understand how do we then shift farmer mindsets from being more business oriented, and how do we link them up with markets? Obviously, we've got the Ministry of Agriculture, we've got Emma. A lot of it within agroecology is how do we do things in harmony with nature? Or how do we then reduce the negative trade-offs that are imposed by the system to the environments that we live in? Then we cannot leave the farmers and the communities and other stakeholders within the communities that we work with. They are our most trusted and valued stakeholders. Thank you so much.
I'm happy to kick off the discussion here. Yeah, I've just got back from Uganda actually, and have been doing evaluation for the European Union there. And it involved looking at wholesale funding through a number of financial instruments, including MFIs, SACCOs, and village savings and lending. And they are able to scale finance in a way that I've not encountered before. I was looking at SACCOs with portfolio of $500,000 and members borrowing lenders of $550,000 in that particular SACCO. And they've managed to do that by registering, formalizing basically village savings and lending groups and SACCOs to enable them to lend throughout the, sort of linkage chain from, the bank in Harare, Kampala, all the way through. And I've seen this in my research here in Zimbabwe is, some years ago. This formal linkage between the financial institutions and the SACCOs and home savings and lending groups are happening to a small degree, but it's really scaling up. I can see in Zambia it's happening, in Uganda it was quite noticeable. Yeah, I guess that would be my first comment. And the way that they've done that is actually digitizing the whole process. So ABI Finance, that financial institution have a TA component where they assist the financial institutions, including SACCOs, DSLAs, to digitize so that they can access finance more easily. And they also build up the capacity of their financial sector partners to be much more able using MIS systems that help them to very speedily assess risk and to do the lending. Yeah, I guess those would be my main, main comment. On the collateral, earlier this year I did some the Swiss embassy, the Swiss Development Corporation, and CIMMYT actually came up in terms of the mechanization program. And one of the opportunities that was identified for evaluation was using the concessionary finance for the purchase of various farm equipment to use that and make the linkage like this can be used as collateral. Okay, it seems like at a diminished rate, you get 20% of the value. I'd be interested to know why, it's so low, but but it's interesting. And when we did the gender analysis, 85% of men were accessing the mechanization program and thereby the collateral opportunity, and only 15% of women. So it kind of begs the opportunity of where are the opportunities to finance concessional finance that enables women, young people who are typically excluded, to own collateral items, particularly in agricultural value chains, where you can add value. Where are the opportunities for women? Okay, I'll leave it at that. Hopefully that stimulates some ideas.
What you see as the key barriers preventing us from reaching a Uganda scenario where it's going to themselves.
Yeah, I'm the formalization of them because they have to be formalized in order to engage with formal finance. But they are the guys that know the farmers on the ground, they know the risks. And I don't know about you, but the research that I've done in Zimbabwe indicates that those village savings and lending groups are turning money around at between 10 and 30% a month. A month. I don't know how they're doing it, but those women, mostly women, are turning around money in a way that leaves most businesses and the banks in the dust. And it'd be interesting to find out how they're doing it.
Someone said that it doesn't involve men, how they do it.
So question.
Yeah.
So Michael, I've got a comment.
Sorry, Constance, and then
Okay, thank you very much for the very informative research and finding. And I just want to also agree with you on a lot of findings. We ran a 7-year program. I think Michael was involved in that. We did a rapid market assessment just to find out what the situation was like, just like we had done. I was rapid followed by a deep dive into the market. Now we're working with financial institutions just for them to get to know. I think, like you're saying, the issue of information asymmetry is very real. The financial institutions, they don't know the profile of the farmers, and the farmers also don't know the financial institutions and the products. And on the financial institution side, it's the lack of like appropriately structured products that are client-centric, that respond to the needs of the smallholder farmers or the rural farmers, such that when you then go backwards to source the funding, it's actually mirroring the structure of the needs as it were. And I think one of the biggest challenges we have nationally is obviously relying on development partners and donors and such. It's national level. I think this is something that we should be looking at. But then you can't address that without going back to our macroeconomics as well. We need to be in a position as a nation to attract appropriately structured credit lines, which can be sourced maybe through the central bank as the lender of last resort, where the interest rates are very, very concessional, and they allow the microfinance institutions and the banks to be able to own land at reasonable interest rates. Right now, what they are doing is wherever they source the fund, for instance, if a Zimbabwean institution were to go out to try and source a credit line, the first thing that just features before you are even looked at as an institution is your country risk profile. And then the interest rate already, you start getting penalized at that level. And then when they then do your assessment as an institution, they load onto the interest rate, and ultimately the resulting interest rate to the smallholder farmer or to the rural farmer, it becomes prohibitive. So that's our biggest, I think, challenge at macro level, which needs to be looked at. Our experiences, I will just touch on a few. I don't need the whole thing, but our experiences was that for those institutions that went on to lend, obviously there was the issue of economic delivery channels, like you already said, which makes the technology route possible. But then there's also issues of the loan sizes. Do they respond, and even the tenure, do they respond to what the rural client requires? These are issues to be looked at when we are looking at the technology aspect. And then we also realized that for those banks that use the ISALs and the SACCOs as the launchpad, the repayment was very good. Why? Because the SACCOs were already, they had the experience, the savings and the lending experience, and they may have paid interest rates of about 30% or whatever, but they don't mind because it's their fund, they own it, and they determine it on their own. Whereas when it comes to a formalized institution, you begin to face the regulations and all that comes with that. So again, the savings culture, I think, needs to be established among the rural clients for them to get that exposure. But we also need to realize that financial literacy is actually, it's a prerequisite before these rural farmers can access financial services from a formal financial institution. And now added to that is the digital literacy that must come with it. Issues of de-risking. Yes, the issues of guarantees, they also help incentivize like big banks, if you want them involved, the guarantees they help. But also, we also realize that de-risking actually starts with the design of the product. Because already when you lend to an ISA or to a group, you're already passing on the risk management to the group first before it comes to the financial institution. So yeah, there are a lot of interesting aspects that you came up with, and we are also currently running a revolving fund with AFC, where we are also realizing, I think my final observation is access to financial services or consumption of financial services, it doesn't happen in a vacuum. There are a lot of partnerships that need to happen on the ground, depending on the activity that the rural client is involved in. And issues of market linkages, training for them to know what is the market, because even if it's at farm gate, even if people are coming to buy chickens at their homestead, it is a marketplace. And how is the rural farmer expected to behave? How can they make that sustainable? And then extension services, whether they are doing livestock, that they are doing the chickens, or if they are doing cropping, the partnership with the local extension officers or the private sector company who might be the off-taker. That it's a package for successful repayment ultimately of the loan. So yeah, like I'm saying, we've had a lot of observations, and the one that we are working with right now, the revolving fund, we have had repayment records of plus 95% from rural clients, but it was because of a whole especially partnerships that we.
Constance, can I just respond? So under the LFSP, that 7-year program, there were various mechanisms, various interventions done by FAO, credit guarantees, involving funds. And my question is around sustainability. These run so long as the donor is there, but when the program ends, are any of those things still continuing since 2020 when the program ended?
Yes, thank you. So the ISAs have continued because they managed to build relationships with the likes of Stewart Bank. They built relationships with certain groups, and those have grown to become even circles, as it were. But the bulk of them, obviously, depending on the exit strategy of the development partner, that fund has to stay and be available to continue to service the markets. And then also, he talked about mission drift. That's very real. Once the development partner is born, even if they get that fund as equity grant, the tendency is for the financial institution to start looking elsewhere, higher returns and bigger loan sizes, etc. So yeah, there's really need. I don't know. I think we need maybe the central bank to continue to make sure that fund is being channeled to where it's supposed to be, and to monitor the financial institutions that have the privilege of accessing those kind of lines.
Thank you, Constance. Mark, we have a comment.
Yeah, thanks, Michael. My comment relates to the previous discussion on other countries which have, shall I say, a more conducive environment for formalization of smallholder cooperatives, whatever it is. We did a lot of work under the ZAGP with the capital business centres and so on, try and get the committees and so on to formalise their businesses. And the poultry guys were the most successful in that. But the problem then becomes that you are visible to the taxman as well as visible to government. And when you add in a 30% withholding tax for dealing with somebody who you don't know who it is, and the IMTT taxes and all the rest of it, that just drives that formalisation straight down the country. Because no one's going to pay the government 30% withholding tax because they're dealing with somebody who doesn't have the tax clearance certificate when you're a smallholder farmer or a smallholder lender. So we need to have. I'd be interested to see what the conditions of lending and financial transactions are in South Africa. In our situation, the government wants to take so much from the formal sector that it is not worth being in the formal sector.
Thank you. Thanks, Mark. Compliance.
Sorry, I just want to also just before we go down into this debate, just to comment on what Barbara mentioned about, and also I think we've kind of like touched on a bit about the whole knowledge asymmetry, information asymmetry. And one of the things that we are trying to do with Amara is to try and beat that back. Come up with obviously digital tools. I think Mike mentioned that, but now with Starlink, you know, access to information has become a thing of the past, especially in these remote areas. We are trying to see if, for instance, we take the internet to the rural areas. Can they have information at their fingertips? But will they be able to use that information for their betterment, right? So now, how do we then set in place people who can mentor farmers, smallholder farmers, on how to use and access information to turn a profit? So I think there's an opportunity that's there. And if, for instance, government would like such initiatives, create hotspots across these rural communities, maybe anchored around the extension services that can become the facilitators or the mediators of this information, would actually create a much larger social network beyond these kind of like clusters of villages or communities that can link farmers with similar conditions that can then provide testament on how they did it and actually improve some of these issues on knowledge asymmetry that we're talking about.
Thanks. Payments or thank you. Mine is not just kind. It's actually interesting. It related to this issue of organization. So now is the formation of SLAs in one of our group, like China more, we actually work by the chief to answer allocations that one need to do with BSLAs and 1% devoted investment. The person is devoted 7,000 years. 7,000 years. And keep saying to you guys that one component this BSLA for this case. So what can we do? We did the what the deals. And what I like from that, then I asked the people like, how did you transfer the person to give them 7,000? And they said, because the one who actually put a bigger chance to actually figure out what the market. And the reason why we gave him the 7,000. So what happened? The guy they discovered that the guy was a track. And that contract was actually spent by the democratic process flash. Then that was the source of the loss. Then I said to them, so what are so 21 new man, what are you going to do? Then they said that then they unfortunately was then they said, no, I'm going to repay them because with other trials, so I'm going to pay them, but no later if that was I'm actually done. Then asked them the person just to need the VSLS. Then all of them they said, yes, we still need them. Then so I said, then what's your vision? Then they said, the chief was the Egyptian. Then they said, with the permission of the chief, we need to build a very big banking here so that we can put our money in the bank. And those people, they were not making a sensitive figure of the money which was with the members. But upon asking their agents, they were saying it was about 40,000. Yeah, so that's one. Then the second one of our open those women, when we started implementing the project, they were very low, like, then they said to us, we're not going to train coaching, because what are we going to do? That's what we are used to give them things, They said, no, we're not going to give them anything. Then we take them through that, the VSLA module. And we did a visit with our country director. They were wearing t-shirts, all of them had their pins, and they were very happy. They actually saying we can actually, that being said, because sometimes because the module was with their village savings. We told them, you don't get money without defining the business, because we say a man should run a specific income generation was for it. So those people that you first year they have to show out of 5,000, then the second day they were about 12,000, and actually advised our model for sharing out say 9 months to 6 months. So I'm actually saying that there's a lot of money circulating within the VSLS. So that's what should be done? All those people, they openly told us like that we don't need anything. We don't need any financial institutions to come here to give us the money to pay for our money, which we are like investing, which are supposed to be business. So what can be done in that scenario? Formalize, or we should be implementing that.
So this thing is experience like this, and they are throughout Zimbabwe. I wonder now why we drafted out the center earlier. It's going maybe 3.5% of households are involved in Zimbabwe. I see that this question of it.
No, it's just a contribution. I think the other thing that I like about ISOs, the interest is going to back to the group members in as much as it is high, like Barbara indicated 20%. It's profit going back to the group. I think we are cultivating the culture of saving and investment back to the group. And I want to emphasize the point that was raised by Constance of partnerships. Because of that information asymmetry that banks don't understand the behavior of farmers, us as development partners, we are promoting these business models. We have information. We know how these communities behave based on the culture. I think we have various selection criteria which we select businesses that we target. I think it's worth sharing with these financial institutions also to leverage on and close that information asymmetry gap. Thank you.
Yeah, just very briefly, also in ZRBF, the final evaluation was found out that the saving loan groups were actually the most effective tool in building resilience. All the other activities were by far not as effective. Therefore,
Thank you, Regina. I'm very excited that we've got a financial institution.
Well,
With all these guys.
First, thank you for this, and it's been a lot of learning. And I want to agree with a lot of things that you have said. And my presence in a financial institution is a little bit unique because I am technically not a banker. I'm actually now a scientist with years of work in the communities. So when I first go to the bank, I was actually asking the same question: why is the farmer so much misunderstood in this space? Okay, so one thing that I've seen in agreement with what all of you are saying is I think we've all been trying to solve a problem which we thought existed. We defined our own problem and we started offering solutions to the problem, yet it wasn't the actual problem that the farmers had. Why am I saying so? If we look at the agricultural landscape, the value chains are so much destroyed. Everybody's got a capitalistic mindset. Everybody's just part of their own dollar. And at the end of the day, I do have fertilizer companies, and my dear sister, she's there, looking out for her dollar. We do have finance institutions, they want their money back. And at the end of the day, no one is really taking time, apart from where of course, I appreciate the work that was being done by our development partners. But no one is really taking time to make sure that the sustainability in keeping together all these parts of the value chain together. I've seen projects taking off, but then the moment this blue, the development partner blue, is taken away, the community defaults back to that particular state. So I'll give you an example. I've been in the boardroom this week trying to advocate for a very ambitious irrigation scheme funding, which I went in there knowing all the odds, but I had to take it out there with my confidence being the only agriculture expert in the room. So I presented this unique story where we we've aggregated a number of smallholder farmers, about 30 of them, and the idea is to put a center for them. Okay, of course, these are expensive things. And then we also agreed with the farmers the kind of crop that we'll do so that they'll be able to pay back the loan and the center payment. Well, on paper, everything is fine and it's perfect, right? We've got partners to supply, even the center pivot. They even pledged that we will not want to pay upfront for this much. So everything is fine. But when we go into the bottom, I'm just trying to paint a picture what happens in the financial institution space. Everybody will find they've got their part to play, but everybody else in the value chain is getting paid cash upfront. And who is carrying the whole cost of it and the risk? It's a financial institution. You stand there, you're now exposed. And we know how financial institutions work. To be very honest, it's not really our money. You understand what I'm talking about? So that's a very big risk that we need help to navigate. And one of the solutions that we proffered in that particular room is that for one condition that we may consider if we're going to fund that is if we had all the parties involved take ownership. For example, somebody placed in a guarantee that if the farmers don't pay, we will do this. I mean, that kind of commitment is just one. And core ownership was, as it stands right now, it looks as if it's the bank that owns the scheme. And yet it's not the case. The bank owns the finance, but the scheme is actually owned by the farmer. Do you understand what I'm talking about? So even in the mindset of those who work with farmers, it will come to a point where farmers just say, no, I was speaking in the vernacular so that it makes the punch. That says they will say, "Imali bank," because that's that understand what I'm talking about. You know, it's who needs the bank. It will be chicken. It's a chicken project. They'll say, "You could take." They're forgetting that the bank is just there to finance their need. So it has only worked, in my opinion, where we had the glue, which is the development organizations. But now, when we are left alone out, the value chain just falls into. There's no ownership. So if I am really advocating for a moment where we have all the players in the value chain, looking at it like we are all little pieces of the same chain, right? Each one playing their own part. So let's see. I know I'm in the business of money. You could be in a business of something else that is supporting the same value chain, but why can't we all take ownership of the value chain and come together?
Thank you for that challenge.
Thank you so much. I think in your presentation, you mentioned the issue of asset-based finance.
What? You're being aggressive.
Oh, sorry.
Yeah.
Sorry.
No, it's okay. It's all right. So I'm saying in your presentation, you made mention of asset-based finance. That costs maybe for about 60 to 80% here, right? And I think also my colleague here, Barbara, also raised the same issue to say when it comes to asset-based finance, why do they have to discount the value of the equipment by 60 to 80%? If the equipment costs maybe $10,000, it ends up having maybe the collateralized value of $2,000. It seems to be a bit harsh. So in my previous life, I once worked with the financial services sector. So you realize our banks and other financial providers, they do, they do have this kind of conservative approach when it comes to the valuation of assets. Ordinarily, if you finance a movable item, it should be the first, option to actually, take all of and then recover what is due to you. See, but with the finance service sector now, what they do is under their conservative approach, they assume what they call the residual liquidation value of an asset, right? To say, number one, this is a movable item, it depreciates in value. Unlike an immovable property,
like land, like buildings, it actually appreciates in value. But it is the opposite when it comes to removable items. So they do actually take into account depreciation. If we as CIMMYT actually loan a piece of equipment like a two-way tractor, or it could be a multi-crop thresher, it could be a chopper grinder. The assumption is that piece of equipment will be put in use over a specified period of time. It could be over maybe 3 years, it could be over 5 years. And once it is put into use, it actually depreciates in value. So at the expiration, those 3 or 5 years, the cost that we bought the equipment, say $10,000, or which was the value then, by the expiration of 3 years or 5 years, it won't fetch a similar amount. It would have actually gone down. It would have actually depreciated in value, right? So they come up with what is called an estimated residual liquidation value of that item over its lifespan, right? And they also assume what we call forced sale conditions, like for instance, an auction. So they would say, if a farmer defaults on his payments, and then we attach this piece of equipment, and then we put it on auction, how much is it likely to fetch? So common sense will tell you that it will not fetch its actual value when it was loaned to the farmer. Because of usage, it would have gone down, it would have depreciated in value. See, so hence they will say it's better for us to create comfort for ourselves by discounting its market value and assume forced sale conditions. So these are some of the issues that we may need to engage the financial sector. If we come up with de-risking measures, if we come up with measures to cushion them against the default risk, we can then use that as the basis to negotiate with them to say maybe your 60 to 80% is too high. Why can't you maybe reduce the haircut to a reasonable level? Because they've also played our part as development partners to actually cushion you against such risk and against such negative eventualities. So it's a discourse. It's something that we may need to discuss, engage with the financial providers.
Very true. I think what we found out was majority of the financial institutions, they didn't know what's the threshold. I think very few people who understood agriculture, what's in oil pricer. So I think it's useful for us to, the partnerships which Constance highlighted, we need to expose the financial sector to these business models as well. But maybe on a point of privilege, coming to the financial institutions, your biggest asset, the reason why you're in business is giving loans. The informal sector is growing. I think it's contributing about 64%. Last week we had the senior management meeting where we had Prof. Mugano. The NDS1 had projected that by 2025 would have reduced employment in the informal sector to 70. It has gone up to 87. I think this calls for you guys to innovate and think about how I'm going to reach, because this is where your business is going. Going to town, not only in the rural areas, everything is getting informal and informal. I think we need to find ways, if you are to stay in business, otherwise the guys who are in the digital space will come and take business from it.
Okay, I think we are all getting a bit, agitated. We're almost getting to close off, if not past close off. I just wanted to just take this opportunity, just use a few comments to share some. So all you've said so far is we need to establish a value system for all the actors in the value chain. And everyone who participates in anything stands to gain or lose for any transaction or for anything that they do within a system. What is the value proposition for them to actually participate? And at the end of the day, do all these players have good negotiation skills so that they understand and take responsibility of any trade-offs or any partnerships that they do within that particular system, value chain? It goes to issues of trust. Do we actually have a good trust system within Zimbabwe at a macro to a micro level. And I think that has kind of like eroded. How do we put that trust into processes and systems that are no longer functioning the way they're supposed to? And I think it's up to us to then engage with different stakeholders to actually for them to see that they can trust us and they should then be able to be trusted by us when we do engage. Like you say, everyone is in it for the buck, but I do believe there are still people who are sincere out there that can be trusted. And with that, I'm just going to just close off with a few words from my end as CIMMYT, someone leading the agroecology initiative, to say that the first 3 years were more of like exploratory phase, where we're trying to understand the context. But in the next 5 years, because it has been extended by another 5 years, we actually want to see how we can implement. A lot of your success stories hopefully will become our success stories. We have been listening. We've taken note of some of the strategies that you've employed. And through APT, we'll hopefully engage with some of you to try and see how we can actually engrave things like sustainability, value systems, trust systems into the processes. And hopefully when we do meet again in the next 5 years, we'll be here with more like testimonies and success stories for everyone. Thank you.
Thank you, Bambai. Just to recognize that the study that we did, we didn't see every financial institution. So, for example, Minerva, represented by SMEs, we didn't get a chance to, and it was just a limitation of time. So thank you very much for your attendance and some great discussions. I think we've benefited greatly from these interactions. This is the final forum for 2024. So I think the committee would join me in wishing you all have a very restful holiday and come back refreshed for 25. Thank you.